Hi everybody, thank you for joining us for today's webinar with Turnkey Technologies and Avalara. My name is Brad Vorbeck. I work in marketing here at Turnkey Technologies, and we also have Zach Lolo from Avalara with us. I'm just going to give a quick intro about Turnkey, then I'm going to hand it off to Zach, who's going to go ahead and give you some tips about solving your sales tax problems as a manufacturing organization. And then if we get any questions, we will go ahead and open it up at the end for a Q&A. If you do have questions, please feel free to submit them using your GoToWebinar panel. And also, this webinar is going to be recorded in case you would like to review what we go over or share it with any of your colleagues. So just a little bit about Turnkey. We are a business solution provider for Microsoft. We're based in St. Louis, Missouri, and we represent everything from dynamic solutions for finance and operations to CRM for customer engagement, as well as Office 365, Power BI, cloud services, reporting, enhancements, and more. So as a Microsoft partner, our main goal is to help our customers take full advantage of these technologies to run their businesses efficiently, and in that spirit we partner with Avalara, who helps our customers with things like tax automation and compliance. So with that said, I will go ahead and hand it off to Zach and let him introduce Avalara.
Awesome, thanks Brad. Hey everyone, my name is Zach Lulo. My title is Strategic Alliance Manager at Avalara. My role, I manage relationship between Avalara and Turnkey, so we work together every day with bringing new customers in, helping outsource their tax compliance. So today we're going to be talking about sales tax and manufacturing. I know everyone in this room has woken up this morning just dying to learn about sales tax. I know I'm so passionate about transactional tax. So let's make this as hopefully as painless as possible. We got some good information in here. If any questions do come up, just throw them in the chat box. As Brad said, he can either jump in and ask the question right away, or we'll have them at the end, kind of depending on the question. So that said, we'll jump in. So just a real easy, short agenda today. We're going to be looking at the key challenges that a lot of manufacturers are going to face. What we're seeing with a lot of our other customers, a lot of our prospects, and just in the industry in general. We're going to look at what Avalara does, how it can help outsource a lot of those problems, and then what some next steps can be for you. So just as a kind of a base to look at why sales tax is a problem, if you look at this pie chart, almost 50% of a state's revenue comes from transactional tax, right? So they have all these different sources of income, and almost half of it's just coming from sales and use tax. A lot of that, and I'm not sure if anyone in this room is looking at e-commerce, but about $13 billion is going uncollected because of e-commerce right now, and that's getting under the state's skin, right? 50% of their income is focused on this, and now e-commerce has presented this way for buyers and sellers to get around sales tax, and they're losing out on $13 billion. Kind of going into that a little bit, I'm not sure if anyone's heard of the Supreme Court case, South Dakota versus Wayfair. This is a hot topic right now. They're trying to redefine what Nexus means and where states are going to be collecting, and states are working very, very hard to get those tax dollars back from e-commerce sales, and that's presenting itself, one, with the Supreme Court case, two, with new laws popping up all over the country with different states on what constitutes Nexus, and three, with states hiring more and more auditors to come in and find those sales and use tax mistakes and try to get that audit money to make up for the lost tax dollars. So many times when we're talking to manufacturers, the obvious pushback is, I don't have a sales tax problem. We sell B2B. I don't work with sales tax. I don't know why we need to talk about this, which is very true. If you are doing B2B transactions, you're not collecting sales tax. However, at the state and federal level, any transaction across the country that's exchanging of goods, exchanging of currency, is going to be eligible to be taxed. The only reason that you're not collecting taxes is because of those exemption certificates. which, as many of you know, they have they're depending on what state you're selling into, what customer you're selling to, sometimes what product you're selling. There's a lot of different certificates that need to be managed, and these things basically turn into currency because if an auditor walks in and asks you why you didn't collect tax on a certain sale and you can't produce that certificate, there's some hefty fines that come your way, including those tax dollars, because there's no proof that you shouldn't have been collecting. So if we're talking about tax calculations, that is really just the tip of the iceberg. There's several different scenarios that we're going to go through, different big problems that come up in sales and use tax compliance. We'll kind of jump in starting off with Nexus. So I'm not sure if everyone is familiar with the term Nexus, but kind of the easy definition is it's the relationship between a state and a business that now obligates them to pay sales and use tax. And historically, the law defines it as a physical presence. So if you have a store, a brick and mortar shop, or a warehouse, or an employee, inventory, anything that is a physical presence, that will constitute Nexus across the country. One of the things right now, as I said, with the Supreme Court case is South Dakota is basically trying to redefine what Nexus means in this court case. And that kind of goes into number 4 here, economic nexus. So historically, the first 3, if you're looking at maintenance and repairs, that's physically someone going to the customer to fix the product. That employee is in that state and it's resulting of a sale that has happened, so that constitutes Nexus. Any kind of field staff, whether that's full-time or contract work, that can constitute Nexus. Any manufacturing reps. Economic Nexus is something new that we've seen pop up in the last couple of years. That's some states saying, hey, a number of transactions or a certain number of dollars sold into my state is going to constitute Nexus for me. So, hey, all of you businesses, you need to measure exactly what dollar amount you're selling into my state, and you need to know that you've passed my basically level going into now you owe me tax dollars. If you sell over X amount, you now owe me tax on those sales. We've seen that popping up throughout the states, and that's something that has been brought up a lot in this court case, the Supreme Court case. That's definitely a possibility that can roll out. We don't know what the outcomes are going to be, but definitely one of the ways that they could combat these lost tax dollars online is to enact economic nexus across the country, which would just further complicate the already complicated sales tax. My screen's changed. Getting back into certificates. So you as a manufacturer, you're not focused on collecting certificates. You're focused on manufacturing. You're focused on selling. You're focused on repairing, having a superior product. All of these things of you've started your business, you're running your business, anything that's revenue generating, the things you focus on. This is much more the back office defense that really no one wants to think about or work on. So you're not focused on getting every certificate in. They're difficult to find in the first place. They're difficult to organize. They're difficult to keep track of. And I'm not sure what level we've got out there. If you've got 25 certificates, then absolutely that's something that's manageable. But if you're talking about 500, 5,000 certificates, that gets to where an expiration date down at the bottom of my filing cabinet kind of gets lost in my Excel sheet, and that is hard to track. And then just getting it back from customers, right? You recognize that you have an expired certificate. Getting over to your customer and having them resend you a fresh certificate, sometimes there's a lot of tracking down there. So another big problem is e-commerce, and again, I'm not sure if anyone in the room is looking at adding e-commerce or has added e-commerce, but it's great for business. I mean, it's a huge thing, and consumers nowadays want everything right now, and they want to be able to buy direct. A lot of B2B have their business transactions online, and it expands your footprint, makes it much easier to reach those people. It's also a huge driver for Nexus growth. Now you have multiple states buying your product over state lines. You can be going across international lines. It's making it more and more complicated. Again, a huge boost in your business. There's just a lot of compliance that you have to understand that goes into what all those sales mean. If you're selling into California or Texas or Colorado, a lot of those states have 400 plus jurisdictions that don't line up with zip codes, and you have to know exactly where you're selling into in that state to understand what tax rate to put onto that transaction. So it gets very complicated with e-com. And then finally, kind of after all the hard work is done, you kind of just add on another chunk of hard work, and now you have to file and remit all of these off to the governing offices. And there was never a meeting. If you guys haven't caught on to that, there was never a meeting with all the states that tried to figure out, hey, how do we deal with the sales tax thing? How do we manage certificates? How do companies file to us? There was never all 50 states in a room. They all created their own rules, and they all enforce what they want to enforce, and they don't communicate about it. They don't try to make it easier. They try to make it actually more difficult so that they can capitalize on those mistakes. So each state has different filing calendars. So you might have a state that you file bi-monthly or semi-annually or annually or all three. And there's just all these different calendars to keep track of. You've got all the different notices, and you've got people full-time trying to keep track of all this. The state's mailing your company saying, hey, I need my money, and you have someone trying to keep track of that and spending 3 or 4 days per state per return, sometimes per month. That turns into a lot of man hours that are not being used on revenue generating activities. So, excuse me. So when you're looking at getting audited, you have an auditor walk in basically demanding for those three things, right? I want to see your transactions with the tax detail. I want to see your exemption certificates, and I want to see your return records for each jurisdiction. And those are three things that are not necessarily easy to keep track of year over year. If an auditor walks in and wants to see a certain transaction from 3 or 4 years ago, or see the exemption certificate that went with that sale 3 or 4 years ago, there's just a lot of moving pieces that may have been updated or changed since then, and might have gotten tossed in the process. That makes for a longer audit and sometimes fines if those things cannot be produced. So what is the reason that a company would even look at a third-party tax compliance tool? A lot of companies that do have someone manually doing this process for them. This is kind of just an average from Aberdeen Research and Wakefield Research. But a lot of companies are spending between around $70,000 to $400,000 a year in compliance, whether that's one person in the back that is managing all this, or if it's a whole team of people. And a lot of times there's still mistakes. This is not a foolproof plan having a team of people do it because of all the changes as we went over. We're looking at this pie chart. This is CFOs were asked if you got audited today, how likely would it be that an auditor found a mistake? And 75% of that group said they would find a mistake. So that shows the confidence and in the majority of CFOs that, yeah, we've got a process right now, we're doing our best, but yeah, absolutely, if an auditor walked in today, they'd find mistakes. So going into audit, I'm not sure if anyone here has been audited, but right now the average audit's about $50,000, and that could be a company that's already spending $70,000 to $400,000 a year on compliance, and then they get audited, and now they've got a $50,000 penalty for having that mistake, and that just goes into a lot of issues where it gets more expensive. As I said, the longer the audit goes, the more expensive the audit is. And that becomes a problem of, I need to see this certificate from 3 or 4 years ago for this transaction, and it takes a couple weeks to find it. Then that adds a couple weeks to your audit. And then he comes back and says, great, thanks for bringing that. Now I need this certificate from 5 years ago for this transaction. That takes a couple more. So it just keeps adding up and up and up and creates a very, very long process. So that's all we're going to talk about for sales and use tax paying. That is kind of just a summary of what we've seen, what our customers have said, what our tax experts are seeing in the manufacturing space as far as tax paying. Now we're just going to do a really kind of summarized version over Avalara and show what areas we're able to really outsource and help out here. So as we were talking about, for Nexus, it's very difficult to decide where you have Nexus, when you have Nexus, what happens when I find out that I have Nexus. You start selling into, say, Colorado. You have to go research all the different jurisdictions in Colorado and say, for each sale, all of these different tax rates, you have to go set up those tax tables within GP so that when those transactions run, it pulls the right rate for what side of the street that you're sending to. Because oftentimes we see in Colorado, just depending on where you are in a certain street, it's going to have a different tax rate. With AvaTax, you start selling into Colorado, you go into AvaTax and you click Colorado and say, now I'm selling here. I have Nexus here, start calculating, and that the system takes it from there. For exemption certificates, you say you've got 500 or 1,000 certificates from a bunch of different states for a bunch of different products. Some of these things can expire in 6 months, some of them can be a year, some of them can be 5 years, some of them can be indefinite. You've got to line all those up with what's valid, what's not. And you have to be sure to keep track of those. With exemption certificates, cert capture actually upload all of the information up into our cloud. It keeps track of all of that information. When the certificates start going out of date, it actually automatically pings the customer and alerts them and says, hey, we need a new certificate from you. The customer can then reply to that email with that certificate. It goes right back into cert capture and completely outsources that part of the business. For e-commerce, say today you're not doing e-commerce, you're strictly doing manufacturing. A year from now you want to add e-commerce. We have integrations to any e-commerce cart that you want. We either already have a pre-built integration or we're working on it. So we are built to scale and to pivot and to grow with you as you make business decisions. And that kind of goes along with anywhere that a transaction can take place. So if you get a new CRM or if you do get a new e-commerce, a lot of times we're going to have that pre-built integration to make it very easy to grow with you. As far as audit readiness, an auditor walks in and says, I want to see all of these transactions. I want to see all of these exemption certificates. Everything is stored in the cloud. So you say, okay, auditor, give me 5 minutes. You walk over and you pull the exact transactions they need and you pull the exact certificates they need. You put them all together, you hand it right back to the auditor. What would have probably taken you a day or two has now taken you 5 or 10 minutes. And that will drastically speed up the audit. And then for filing, we can completely outsource that. Avalara can send off to all the governing offices with an ACH transfer. Basically, we tell you the exact amount that you owe. You can do an ACH transfer to Avalara. We can split that up to what city should this go to, what county, what state, what is the filing calendar, and we remit all of that off on behalf of you. So really from the point of calculating the transaction, keeping certificates up to date, and filing to the governing offices, we completely outsource the process. And this is just a good visual that shows you kind of how that works. Your system's in the center, that's GP, and add an eCommerce or CRM, whatever else you're using in there. That plugs in directly with Avatax, so that's where the communication takes place, and it also plugs into cert capture. So at the point of transaction, Avatax and cert capture will ask a certain number of questions. Basically, where is the product coming from? Where is it going to? Do I have a resale certificate on file? Is it a tax holiday? Is this product even taxable in general? It'll bring all this information, basically ping up to the cloud, bring all that information back in less than a second, basically real time, and make sure that you're charging the exact correct amount of sales tax every time. Once you have collected that, again, we can file on your behalf to the governing offices. There's usually one more little arrow in here that shows government can change any of these rules at any time, right? They can say this jurisdiction now is a higher tax percentage, or it's these certificates have changed, or you owe tax on a different calendar. Like all of the changes that can happen, as soon as those changes take place, they're uploaded into our Avatax engine. We have a team of people working around the clock to make sure that every single rate is correct every time. So they make the change, Avatax updates. There's no work on your end. That is just a seamless integration that once it is set up, Avatax is kept up to date. Oftentimes cert capture, a lot of the work, a lot of the time is put on your customers. Once those certs are going out of date, it puts the burden on the customer to send a new certificate in, and the returns have now been outsourced to Avalara. So it takes out the whole pain of sales and use tax. So just a little history on Avalara. We've been around for about 14 years with over 20,000 active customers. I'm thinking that number is probably a little closer to 24, 25 now. We do have over 600 different pre-built integrations, which is what I was talking about. If you have any strategic business decisions to make in the coming years, we're able to pivot with you in almost any direction. We've got 6.7 billion transactions processed in 2017. That's just an absurd number, and that grows exponentially every year. So I'm excited to see what we're able to process in 2018. 18 million exemption certificates managed, and we get almost $30 billion in tax remittance to governing offices last year. So, and again, that number is just blowing my mind as well. So we've got a lot of happy customers. A lot of folks have chosen Avalara to outsource. They've been able to free up a lot of time to be focusing more on revenue generating activities and protecting their business with ensuring their compliance every step of the way. And with that, that is the end of what I have prepared. Brad, do we have any questions in the chat box?
We do not have questions submitted at this time, Zach, but did you have any other information you wanted to add before we go ahead and wrap it up?
I think so. So specifically to talk to everyone here for manufacturing and everyone's running Dynamics GP, we have a team of sales folks that's their full-time job as they talk to manufacturers that are running GP. We're able to have a full-time staff of people that all they do is talk to manufacturer running GP. So it tells you how many conversations we have. So they know the space, they know the ERP, they know all the tax pains through and through. I'd say if there's any doubt in your mind or any kind of question or concern, reach out and absolutely talk to one of those experts. I think you're either going to come out of that conversation with peace of mind that, hey, you're doing everything right, you have everything under control, you don't need to worry about outsourcing, or you're going to come out of the conversation, yeah, I probably should make some kind of decision. Another one of our tools that I didn't actually go into, which may be helpful to start the conversation, is we have a tax advisory service. We can basically do a Nexus study. So our team would send you a questionnaire. You can fill it out, all these questions about your business, and then we can do a cross-country study and let you know where you actually should be collecting. You're only collecting in one state. Hey, this report comes back and you should be collecting in 6 or 7. That's a big red flag. And that opens up a good conversation to come talk to our folks at Avalara and see what some good next steps would be.
Okay. Great. Well, I just want to thank everybody again for joining us today, and a huge thank you to Zach from Avalara for presenting for us. Just a reminder that we will be sending out the follow-up email tomorrow, and we'll have a link to the recording as well as our contact information. So if you have any questions about what we talked about today, as Zach said, please do not hesitate to reach out. And until next time, I hope everybody has a great afternoon. Thanks again.